For budgetary support, the Kenyan government is seeking 70 billion from the domestic market. You have an opportunity to invest a minimum of 50,000 Kenya shillings in either one or three of the reopened fixed coupon bonds, the FXD1 2020-15, the FXD1 2022-15, or the FXD1 2022-25. These are bonds that are paying their coupons in the months of February, August, and October. And therefore, they give a good opportunity for those who are looking for bonds for laddering purpose. And especially this bond, FXD1 2020-15, which is paying its coupons in the month of February and August. If you look backward for the last 1 year, we did not have a bond that is paying its coupons in the month of February and August, and therefore, for those investors looking for a bond for laddering purpose, this is a good investment. These three bonds are paying a coupon in the highs of 12.75%. And when you look at the prevailing market interest rate, which stands at 10.45%, as per the recent Treasury bill auction, because it is a 364-day Treasury bill that gives us the prevailing market interest rate, then these bonds are giving us returns or coupons higher than the prevailing market interest rates. For purposes of this video, we are going to concentrate on the FXD1 2020-15 for purpose of giving you all the information that you require in investing in fixed coupon bonds. And therefore, there is a good reason for you to watch this video to the very end. The other two bonds, we shall analyze them in the next video, looking into their important dates. We shall continue with the detailed analysis of the FXD1 2020-15 after 3 seconds short break, so don't go away. In the meantime, give us a like to this video, engage us in the comment section, and share this video to another person. If you are new to the channel, don't forget to subscribe to the channel and hit the notification button so that next when we upload a value-packed video, then YouTube will send you a notification for the same. See you after 3 seconds short break. Welcome back and thank you for your like and comment. The first item that we are going to consider here is the structure of the name of a bond. The name of a bond will have three parts, and a good example is the FXD1 2020-15. The first part gives you the type of a bond, and therefore with this one, this is a fixed coupon bond. You can also call it a fixed interest bond. The extension by numeral 1 to become an FXD1, the 1 is what it denotes a reopened bond. When you see FXD without the 1, that means it's an original issue, a bond that is being issued for the first time. When it has the extension by 1 to become an FXD1, that means this bond is being reissued during its lifetime, where lifetime becomes the maturity period of a bond or the investment period of a bond. Then the middle part, 2020, gives us the year when the bond was originally issued. For this one, it was first issued in the year 2020. And the last part gives us the maturity period or the original maturity of the bond. We will look at the significance of the original maturity of the bond when we shall be looking at taxation. So this is a bond that was first issued with maturity of 15 years. Item number 2 to look at is how to determine the redemption date of a bond, where redemption means buying back, the date when the government will pay you back the amount that you have invested and any balance in coupons. To get your redemption year, take the original year of issue, which is the middle part of the name of the bond, then add the original maturity of the bond, which is the third part of the name. So for this one, we are taking the year 2020 plus 15 years of maturity to get 2035 as our redemption year. Then you can adjust that with the month when the bond, or when you are investing in the bond or the bond is reissued, to get the specific duration in which you are investing. Being a reopened paper, we are investing in the middle of its lifetime, and our investment will only run for the remaining life of the bond or the remaining maturity period of the bond. So to determine the period for which you will be investing in the bond, then take the redemption year that you have calculated and deduct the year when you are investing. In this case, we take the 2035, the redemption year, minus 2025 as our year of investment, and we are getting a staggering 10 years of investment. And because we are in the middle of the year, we are investing in April, and this bond is paying in February and August, meaning that those are the two respective months when the bond should lapse or mature. Then you adjust with the month that you are investing, and that leaves us with 9.9 years of investment. Item number 3, we will look at taxation, because taxation is very important. It's one of the variables that you must always look for when you are investing. All fixed coupon bonds, or all bonds except the infrastructure bonds that are issued free of tax, if a bond has a maturity period of 10 years and above, it attracts a discount in taxation. It is taxed at a reduced withholding tax rate of 10%. Any bond of a maturity period less than 10 years attracts the normal withholding tax rate of 15%. So investing in these kind of bonds, you are already saving a 5% on tax. But we have already calculated that we are investing in this bond for a remaining period of 9.9 years. And we are saying that it is bonds of 10 years and above that attract a discount in their tax to be taxed at 10%. The reason is that when you are investing in a reopened bond, you are not investing in a new bond. And therefore, you are investing to be bound by the original terms and conditions that prevails in the original issue. And therefore, we are investing in the same terms and conditions that bind the current investors in the bond or invested in year 2020 when the bond was originally issued. And therefore, that time, the bond had a maturity period of 15 years. And that's why it attracted a withholding tax rate of 10%. Because it's part of the terms and conditions, we also enjoy the 10% withholding tax, even though we are investing in a reduced remaining maturity period of 9.9 years. This bond, FXD1 2020-15, is paying its coupon of 12.7560% in the months of February and August. And to be precise then, this bond has already paid its first coupon for the year 2025 in February. We are waiting for the next coupon that will be paid in August 2025, precisely on 18th of August 2025. Considering that period, because bond pays you coupon 2 times in a year, the annual coupon is divided by 2, and you get the first payment after the lapse of the first 6 months, then the balance is paid at the end of the year. So when you are investing in a reopened bond, then there is a period that will be between the date when the immediate last coupon was paid, and the value date of the bond. The value date is a specific date when all investors in the reopened bond will RTGS or wire their payment for their investment to CBK, and that is the same date when those payments reflect in your DAO ZSD portfolio account. That period between the last coupon date and the date when you pay for your current investment, there is interest that has already accrued, because interest on these bonds or in investments accrue on a daily basis. So the current investors in the bond have already accrued interest for that period from the last date of payment to the date when you are going to pay for your investment. And because you are investing in the same terms and condition, meaning that your coupon will be paid the same date that they are paying, then you are required to pay that interest accrued in order to unify your investment with the current investors. We must all be treated the same way in the same investment. And for that reason, when you are investing in a reopened paper, you purchase the investment, that is the bond, and also purchase the accrued interest. The accrued interest, the purchase of the bond, the price is determined through the auction. And that price in the auction, we call it a clean price. Then the accrued interest has been calculated and shall be added to your clean price to determine the actual price that you pay to CBK. That new price to which an accrued interest has been added to the clean price, we call it a dirty price. But your taxes are calculated based on the clean price and not the dirty price. For that reason, our FXD1 2020-15 has accrued interest of 1.7172 per 100. That 1.7172 shall be added to the clean price, which will be an outcome of the bond auction to get the dirty price. So that is to say we have two prices in a bond auction, that is a clean price and a dirty price, and that is how those two prices are determined. Those are the details that you need to understand when you are investing in a reopened bond, especially the fixed coupon bonds. These bonds do not have a redemption structure. Rather, they are not redeemed in part. That means that your investment, or when you choose to invest in a fixed coupon bond, purchase a bond that you are willing to hold to maturity, because CBK does not redeem or buy back fixed coupon bonds the way it does infrastructure bonds. The other rationale for you purchasing fixed coupon bonds that you are willing to hold to term is that these bonds you are purchasing as a retail investor, and any investment in fixed coupon bonds that is of an amount face value below 50 million, we regard it as an odd transaction in the secondary market, and that is what makes it a little bit difficult to get a purchaser or a buyer of that particular bond. And in many cases, out of struggle, whoever you get to buy a bond of 50,000, 100,000, in the nature of a fixed coupon bond, they will always want to buy it at a loss. And the other alternative that you are left with is then to sell back that bond to CBK through a process we call bond rediscounting, which also attracts a loss of about 3% of the value of the bond, because CBK rediscounts your bond at a 3% above the prevailing market or yield price. We'll take a very short break of about 3 seconds, and when we come back, we shall look at determination of the price, or the price that we expect to pay for this particular bond and the important date relating to the bond. See you after 3 seconds, short break. So looking at the prevailing market interest rate at 10.5% and the coupon rate of this bond at 12.7560%, that means that this bond has a coupon or yield that is higher than the prevailing market interest rate. That is a pointer towards this bond being issued at a premium. Another factor that we must look at is the maturity period or maturity period of the bond. A 9.9-year investment period is not a short investment period. Bonds that are issued for a long maturity period, they normally get compensated with a discount for that long maturity or waiting period and to compensate for the interest risk. But looking at an issue of multiple bonds, this is the shortest bond that we have out of the 3 bonds that are on issue. And for that reason then, these bonds being the shortest maturing bond in this issue may not have that as a factor in discounting it. But number 3 is very important, that during these declining market interest rates, fund managers, who are mostly the competitive bidders and the ones that determine the price at which the retail invest the price in the auction, then fund managers would always want to get the most out of their investment in order to at least average up the returns that they are giving to their investors. And therefore, we expect that fund managers in their competitive bidding will try as much as possible to push their expected yields higher than the coupon rate of the bond. Therefore, getting an average accepted rate of the weighted rate of the accepted bids higher than the coupon rate of the bond, that means that CBK will compensate investors for that difference, where the investors will have shown their expression that, or expressed themselves that they are asking for a higher return compared to the coupon rate of the bond, and the only way that is compensated is by giving or discounting the bond. So as a conclusion, looking at the general factor that the bond has a coupon rate that is higher than the prevailing market interest rate, which is a pointer to a premium, and those other 2 factors compensating one another, then we expect this particular bond to be issued at a slight premium, meaning that the price could be slightly above 100 the par price. And when you add the accrued interest to that clean price, this bond will be at a price about 101.7560 shillings per 100. The following are the important dates for this FXD1 2020-15. The bidding period. Bidding period is the selling period, the period within which you are supposed to open your USD account if you don't have one and place your bid. This bidding period we have been given from today, 20th March of 2025 up to 2nd April 2025. The next important date is the bid closure date and the auction date, because those 2 events take place the same day. Bid closure and auction dates, they take place on the last day of the bidding period, which we have stated is from 20th March to 2nd April 2025. So 2nd April 2025 is the bid closure date, and bidding closes at 10 a.m. of the last day. So on that day, any bid that you make after 10 o'clock in the morning, then that is an automatic rejection. In the afternoon of the same day, that is when the auction is automatically takes place, and therefore our auction date becomes the 2nd April 2025. Once the auction concludes, immediately investors will receive informations of their payment key and the amounts that they are supposed to pay, or rather, after the auction, we get the auction results. And therefore, from the moment you receive your auction results, that marks the beginning of the payment period. And you are given about 4 days to organize to RTGS your payment to CBK. And for that reason, we shall have 2nd April 2025 all the way to 7th April 2025 to organize for payment of your successful bids. And it's very important to note that auctions always take place on a Wednesday afternoon. And the payments for bids and payments for coupons and the redemptions always happen on a Monday. That is something that you observe out of experience in biddings or in bond auctions. Then lastly, but not the least, is the settlement date. Most people make a lot of calls concerning they have received their successful bids, they have made their payments, but they cannot see those payments reflecting in their DAO ZSD accounts. The settlement date, or which we also call the value date, is the last day of the bidding period. That all payments that have been done of successful bids in an auction, they are all updated in the system the same day, and that is on the value date, which is the last day of the payment period or the value date, and this one shall be 7th April 2025. So if you make your payment before that date, expect that you will not see the results in your portfolio account or your investment valuation account, but they will appear on Monday, 7th April 2025 as the value date. Then we have the secondary trading. Immediately on the value date, all those successful bonds which have been paid for, they are pushed from the primary market to the secondary market for purpose of trading, where trading is for those who had purchased the bonds to wait for a price change in order to dispose the bonds at a gain. That is a business in the secondary market, which is the Nairobi Stock Exchange. And that gives us the two types of markets in bond investing. We have the primary market, which is the CBK, and we have the secondary market, which refers to the Nairobi Stock Exchange. Thank you for watching, and see you in our next video, where we shall be looking at the details of the specific dates and determination of the price for the FXD1 2022-15 and FXD1 2022-25. Thank you for watching.